Bay Area news coverage starts right now. This is KTVU Channel 2 News at 5.
Goldman Sachs, which was pretty much Teflon through the downturn, is now in the crosshairs of the Securities and Exchange Commission. I'm consumer editor Tom Bakar. What that means, still ahead.
The stock market plunged today with the Dow losing 126 points. It came after the federal government accused investment giant Goldman Sachs of cheating investors out of a huge sum of money. KTVU's consumer editor Tom Bakar is in the newsroom tonight with more on what all of this means. Tom?
Big deal. You know, Goldman Sachs shareholders, they lost a lot of money. Goldman Sachs security buyers lost $1 billion. But public cynicism against big banks, well, that soared today.
Stock regulators have filed civil fraud charges against Wall Street heavyweight Goldman Sachs. The SEC accuses Goldman of defrauding investors by failing to tell them that one of its clients...
KGO Radio's business reporter says government fraud charges against Goldman Sachs are devastating to the firm's reputation, but also gives investors even more reason to keep away from the market.
It's just as bad for the rest of Wall Street. Individual investors still aren't investing in stocks. This is going to make them even more wary.
Some think the market was simply looking for an excuse to sell off after a 13% run-up since February.
Good time to take profits, and it was a good reason. You know, anything to take a little money off the table, which was probably a smart idea with this because there might be other shoes to fall. And, of course, the market doesn't like uncertainty.
Besides the SEC charges, the embarrassment, and the loss of stock value, Goldman Sachs is facing a raft of lawsuits.
Goldman Sachs should be held responsible for anything they might have done wrong.
Attorney Daniel Bocondi works closely with Novato-based Investors Recovery, a clearinghouse that matches defrauded investors with securities lawyers.
They can seek a rescission of the contracts, which means they can get back some or all of what they invested.
In this case, an investment firm, Paulson, wanted to sell securities backed by mortgages through Goldman.
Paulson helped design the security, and Goldman Sachs sold it representing that it was going to go up.
But, charges the SEC, Paulson put bad loans into those securities, making them sure to fail. Then, Paulson bet against those very securities, gaining $1 billion when the investors lost $1 billion.
Goldman Sachs obviously should have disclosed that the security was designed to fail.
Lots of lawsuits to follow. Goldman also faces shareholder lawsuits for lost stock values. Goldman issued a statement after the charges were announced, categorically denying any wrongdoing and promising a big court battle against Uncle Sam. Reporting live, consumer editor Tom Bakar, KTVU Channel 2 News.